So good afternoon, Cam, and welcome back to another episode of Trading Success. How have you been?
Hey Chris, good thanks. Missed you last week, but it was a public holiday in the Independence Day in the US, so the markets were there's a couple of days of obviously expected quiet action. So we didn't expect much to play out, but we did. I put something on our IDTA traders Facebook page just as a summary as to what I thought could happen on a technical level on the charts, and that worked out very well actually. So I'll review that, and we'll talk about what this week could be like in the indexes. But we did have a very big drop in the Bitcoin price, which scared a lot of people, I think. So we'll look at that and see where that's found a bit of support. But it's some pretty bullish action in the indexes last week, considering the holiday.
Yeah, I noticed the Nasdaq was back up. What was it, 20,600 this morning?
Yeah, we broke all-time highs last week. On Friday night, we broke all-time highs again. So I think there's been 34 new all-time highs this year so far. So
I was going to say we seem to comment on it pretty much every week. Every week we're talking about all-time highs, don't we?
Bullish. Yeah, just buy the start of the week and hold on. But this could be a little bit different this week. So we'll see. There's a bit of particularly last week the price action went up on fairly weak volumes, being a public holiday. So I don't know how strong that will be. So there's a few imbalance zones that I'll explain that probably will look to be filled, I'd say. So I think there could be some bigger short moves in the markets this week, some bigger short trends, but we'll see how it all plays out.
Cool. Well, I'll let you bring the charts up, and we'll dive straight in.
Yeah. Okay. Well, let's start with the S&P 500. So I'll bring that one up, and I'll just make sure I can share the screen. Okay. So Chris, let's start with the S&P 500. So what we talked about last week when I sent this out to the IDTA traders on the Facebook page, we were looking at this day here. This was Friday from the week prior. And because it was an outside day, I was using that as my balanced range. So we've talked about before balance rules. We tend to, it was a big part of our macro analysis, and it can give us some key support and resistance levels on that particular chart. So we look to see how the market behaves on the smaller timeframes around those areas. So what we were expecting was, there's basically two options in this scenario. So we've got so this is today's trading so far. This was Friday, that was Thursday, that was Wednesday. So Wednesday we broke out. Now we did have Wednesday and Thursday, the market was only open for around about 3 hours for the US cash market. So there was very thin trade. There was a bit more trade on Wednesday than there was on the Thursday here. But on the Wednesday, the market broke out. And what we were looking for was if the market holds above 5585, which was that high, we're going to look for continuation signs. So look for the market to come back to 5585 and then look for potential longs off that level. And when we look at a 5-minute chart, it can take quite some time for that to happen. Say for instance on so look at this. This is the 5-minute chart, right? So this was, if we look at the 5-minute chart on Friday, there's 5585 down there. Yeah. Right. So this was news. This was non-farm payroll announcement came out. Yep. Then we had the open of the market. So there was some good trade opportunities here. So in the live trading room me and Ingla were running the live trading room on Friday night, we got a buy switch here for 4 ticks. Then we got a continuation trade here I can show you the results. We got a they won't be on here because I was on my laptop. But anyway, we got a long there and we got a long there. Now, this basically this market was pretty much stuck in this, what we call this climactic shadow, which was this big news candle here. And look what the market did. When it finally went down and tested that level, look at the strong response. So if you look at that big tail underneath, that's very strong buying rejection. And then if we look and see what the market did, it kept grinding higher and higher and higher until I think the close was up here somewhere where the market kind of went sideways up at the close. But the key aspect was, you don't know when these markets are going to break out, but you're looking for signs. Like we had double failure down here at 5585, and the market showed strength. You're going to look for long trades, all right? So we were very cautious early in the session because we were just trying to see, if the market could break early, but we weren't prepared to break outside the shadow. We were only trading up to the 76 of that area. And if you look at how the market was behaving, the market was pretty much, if we look here, if you look at the fibs on the right-hand side here, I know whether you can see them. Yeah. The market was failing to get above the 23. Like it was really stuck at the 23, which is there. And then the market was failing at the 76 also. So we were very wary to trade up, beyond the 76 early in the session. So we took a little scalp back up to basically up to yesterday's high here on the open. Then we failed, and then we went again, took another attempt, and we got out obviously before the 76 on that particular trade. But like I said, the key element was it was holding off that 5585. So we can see here the market is in continuation mode. Now, what we're going to look for this week, however, what's happened is that this market is in what we call imbalance, right? Because we've got an imbalance level here. Oh, well, at the moment, we don't know. The imbalance is actually down here, sorry. So that's the imbalance level we know, right there and there. So we've got imbalance zone there that was created on Tuesday here. Then we've also got the Wednesday imbalance zone. So we've got these two imbalance zones that, if the market shows any weakness, if we come back and retest this old balance area, then, we could see this being filled out, right? Because markets like to, there's a saying called backing and filling. The market likes to come back and fill itself in like it did over here. Like we had imbalance here on this particular day here. I'll just draw a new rectangle so you can see it. So we had imbalance here on the daily chart, and you can see the market came down and it has actually filled that area out. Yeah. And what that actually does, if the market comes back and fills itself out, it actually strengthens the market in its way it's behaving. So, markets are very efficient. They like to clean up those areas, and now the market's trending away. So hope to see if the market can come back down and fill this area. Hopefully you'll see the market will continue on with this uptrend that we're seeing. So that's the S&P 500. Nasdaq is very aligned as well. Nasdaq's doing very similar behavior, but we've got this imbalance zone here. We've got another imbalance zone here as well. There as well. So, and you can see where we're failing. We're failing at these clusters based on this last swing. So, if we see any bearish activity, I'll be definitely looking for this market to come back through, around that 20,372. You're looking for a break of 20,400, and then maybe this area could get tested here. Yeah.
So it looks like there's a lot of potential options on the short side while it comes back to either fill these gaps or retest these key levels.
Yeah, I think, this market went up on relatively weak volume last week, particularly on Friday. It was very weak volume. So yeah, I'm thinking like even this day, like, very weak volume in the market, made all-time highs. So if we see any signs of weakness, I think, we'll look at these imbalance zones down through here. And just so you're aware how we work out an imbalance zone, basically it's a 3-candle sequence. All right. And so basically you can see this candle here has not been filled in yet. This market never came back and filled it. So it never pushed back in. Same here. So if you've got 1, 2, 3 candles, the market came in here slightly, but it hasn't come back and filled it. So there's, 2 imbalance zones from just last week that could potentially be filled out. Now, let's talk about Bitcoin, because Bitcoin got absolutely ravaged last week. And, a lot of people were freaking out. I don't know whether you're following what's happening with the Bitcoin market, but I know there's been a lot of Bitcoin put onto exchanges because of, I believe, back in 2014 or 2013, one of the largest exchanges in China called Mt. Gox was hacked, and a huge amount of Bitcoin was lost, or I don't know the full story. I haven't done a lot of research on it, but I just know that a lot of that legal action is now forthcoming, and now those Bitcoin have gone back onto the exchanges, I believe, so for sale. So that increase in liquidity created an increased supply issue, which decreased the value, and it was due to, like, Bitcoin was due for a pullback, because you could see on a technical level just how people who were trading the long side of it, expecting this market to break out. We've been talking about how much hype there's been in these markets. A lot of these people that have been buying the highs look like they got trapped. So a lot of leveraged longs got caught out here, and you can see where the market has gone back and tested. We've actually come back down to 54,000, and we broke this trend line here, this downward trend line also, but the market has bounced back, and so this market is out of balance to the downside as well over the last 3 days.
Yeah, massively.
But we'll see. Yeah, I think before, getting back in, I think there was a bit of some buying over the weekend. A few traders getting back in the market, because I think it went down to 54, and then it rebalanced, and I think it went back up to 58 at some point. But it's looking that was over the weekend anyway, because this is the CME Bitcoin futures. It doesn't trade. Bitcoin doesn't trade on the CME over the weekend, so this is why there's a gap here. So I think the market fell down pretty heavily on the weekend, and I think it might have tried to do like a dead cat bounce, but we'll see if it does recover and continue to rally from here. Is this going to be the final support level? If you look at the fibs, we've kind of come down. We're close to the clusters. I think 52,000, is an area that could be retested. Because if you look to the right-hand side, you can see how we've still got imbalance down through here as well. So that looks like that imbalance area has been filled, but this imbalance hasn't been filled down here yet. So maybe this market could go down to 50,000 still. So yeah, but it looks like people are starting to buy again down at these prices. I believe the volumes on the exchanges have picked up. Anyway, that's that. Oil's been a little sluggish. It had a good rally early in the week, and then we're in this balance zone right now. So once again, if you're trading oil, you'd probably want to see, that candle there is kind of framing the balance at the moment, we've got this outside candle here. So we're struggling to break that $84 level again. And what's that, 82.69? That level there, we want to see support above 82.69. If this market doesn't find support, then we could be heading back down and covering these imbalance areas down through here. You can see there's a fair amount of imbalance in the there's a fair amount of imbalance zone here, and also what else is there? I think there's some imbalance here as well. But it looks like, we got above that old balance area here. After that imbalance was filled through here, oil has got back above that old area. So I think that, $79, $80 level is like the support level for oil. So I think we're going to just see continuation to the high side. And last but not least is the gold market. Gold has had a good week last week, and you can see how we're holding above these trend lines here on gold. So gold, hit 2,400 last week and had a really nice bullish week. That and silver, and the commodities had a good run, and that was good for the Aussie dollar as well. We saw the Aussie dollar back over 67 cents, and the US dollar was a little bit weaker. So all in all, that's kind of it for the charts. In terms of news, Chris, I'll bring over Forex Factory, because there is a little bit of red flag news. So Wednesday, 12 a.m., so it'll be late Tuesday night, so if you're trading the Tuesday US Open, we could see some volatile behavior so Tuesday night, Wednesday morning, Wednesday night, Thursday morning. Chairman Powell is speaking. I think it's a lot of it. You can read all the details around it, but there's a lot of questions that he'll be having to answer. The press and various people. I'm not too sure who's actually asking the questions, but anyway, his words can have effects on the markets. So we could see some volatile price movements in the markets on late Tuesday night coming into Wednesday morning, and also on Wednesday night coming to Thursday morning. We also have CPI on Thursday night. So 10:30 CPI news is generally fairly volatile as well. And then PPI on Friday night. So we've got a fair bit of news this week. So we should see a lot of price action around those US cash markets. So it should be pretty fiery.
That's the pre-market time zone for them, isn't it? Just before they sort of kick off their trading day.
Yeah, Thursday and Friday. Yeah, so that pre-market, a little bit like, how I showed you that non-farm payroll announcement that we had on last Friday. We can get that kind of volatility, like the market, like on that candle, actually in one candle, 1 5-minute bar, broke the low and then also broke the high from what happened in Asia and Europe just in 5 minutes. That's how much price action you can get in those moves. So you can trade those moves if you really know what you're doing, but it is pretty risky.
That's to see how it sort of plays out after that most of the time.
It's not easy to trade around the news, but you've really got to be quick and short and sharp and have an understanding of how the liquidity is being treated in the market. So it's a little bit more advanced concepts, but it definitely can be traded. So anyway, I think that's about it, guys. Chris, I don't think there's much more to report this week.
No,
so
just keep
I think
an
all
eye
eyes
on these key levels. Yeah,
absolutely.
Fantastic. Thank you, Cam, as always.
All right. Thanks, Chris.
You're welcome.
Thanks, guys. See you next week.
Bye-bye.